Okay, continuation for chapter 8. Essentially, we're doing financial records. Okay. So you have your receipts and then you have your disbursements. As long as you're properly able to segregate, you input the needed information and then you segregate them properly to their respective expense type, then it would be easy for the, let's say, the accountant to be able to create your financial statements from these uh, two records, the receipts and the disbursements. Okay. If you would notice up here, okay, there's already total amounts. Okay. Total for the cash and bank, and then I made this black line. Essentially, this is your limit. You can't input anything beyond this point because by then, the formula would not include anything beyond the black line. So if you need more space, what you do, since most of the numbers here are already on a formula. So let's say you've already reached this part and you have more transactions. So let's say it's only May. You're already recording up to this point. So you can simply highlight it. Click one of the rows and then you highlight a few until the black line and then you can insert additional rows. Okay, and then you do that as long as you still need space for recording. Okay, but again, don't go beyond the black line because the formula is only up to this point. Okay, if you insert rows, before the black lines, and that's okay. The formula would adjust to include up to that point. It's still, until the black line. So it's the same for the receipts and the disbursement. So if you want to use this template for your, recording later on, then that's also, possible. So I'm already, what do you call it? Orienting you on how to use these recordings. So again, if you need more space, just, click before the black line and then insert and so on and so forth. Okay. So the accountant would need it is the responsibility of the church to keep their records and maintain their records. So putting data into these sheets, receipts and disbursements, this is the responsibility of the church. Okay. And then there are two types of audit. So we have the internal audit and then the external audit. The internal audit is not required, so it's management discretion if they want to have an internal audit. Essentially, the purpose of an internal audit is to provide assurance to the management that they are, recording their transactions properly, that their records are complete, that the records are accurate, okay, and then they are updated in a timely manner, okay. For the most part, when we talk about audit, it's normally financial audit or the records. We are checking the accuracy, completeness, and timeliness of the records. But when it comes to business or organization, there are other types of audit. Okay, you have your compliance audit. Essentially, what you're checking is that the organization is complying with all the laws and regulations applicable to them. So that's compliance audit. And then we also have operations audit. The management would like to check if they are operating in a proper manner, in an efficient manner, and they are able to deliver the goods or services that they are offering at the least cost possible while also maintaining the quality of their goods or services. Okay, so in compliance audit, it's more about um, improving the processes or the procedures for efficiency. Okay, efficiency is the usage of the least amount of resources to maximize output. Okay, with the least amount of resources, you're trying to maximize the output that you can have from that amount of resources. Okay, so Those are the three most common or most known type of audit. So you have the financial, you have the compliance, and then you have the operations audit. Okay, but we will focus on financial audit. Okay, so more on the records of the financial transactions of the church. Again, internal audit is merely to provide assurance to the management that they're doing right. Okay, internal because they would have to hire their own people, or they would have to hire they would have to outsource it from let's say an accounting firm, and then they would have to pay for it. Okay, but the report that would be made by the internal auditor is only for the use of the management, for them to improve their either their records, their operations, or their compliance to laws and regulations. Okay, again, it's not required. And then the other type, which is external audit, um, the only required is the financial. Okay, financial external audit. Okay, we call it external because the person or the firm, accounting firm, doing the audit is separate from the church. Okay, so it must be another entity or another person or another accounting firm. Okay, that's why it's called external. It's not someone from inside the church. Okay, and then this external auditor, they would check the records. They would scrutinize the records, see if there's any error, check it for errors, check it for possibility of fraud. After they are, satisfied that errors have been corrected, even if there are, okay, it's possible to have errors, but as long as they are corrected, if they are found out by the external auditor, then they would suggest, making corrections to it, and then it's the management's responsibility to correct those errors. Okay, and then for fraud, if an external auditor notices a fraud, then the auditor would consult with the management. We do feel that certain fraudulent activities have occurred. You might want to check or investigate further, and then if corrections are to be made again, and if the management is agreeable to the corrections, then corrections should be made. Okay, and then of course, if it would involve fraud, then the people who have committed the fraud must be held responsible. And if there are, monetary, what do you call it? If they were able to pocket certain sums of money, then they would have to be, what do you call it? They should be held responsible and obliged to pay back the money. And sometimes, penalties would also be imposed. Sometimes the police would get involved. We have to make a proper report that this person stole money from the organization, from the coffers of the church. So it would depend on how amenable the perpetrators are. Okay, if they are, if they would admit to their what do you call it, a crime. Okay, would you call it a crime? If they easily admit to committing the fraud, if they are amenable to returning the money, reimbursing the church, then the church management may let him off by simply returning the money and not giving him the work, okay, removing him or the person from handling the funds of the church, okay, because by then he's no longer trustworthy trustworthy to manage the funds or to hold the funds of the church, okay. But sometimes if it's in extreme cases, the police would have to be involved, okay. Essentially, a audit would be conducted for the purpose of, uh, seeing mistakes, correcting errors, and then if there is any fraud, then also spotting it, okay, being able to determine if there is fraud or not, okay. In external audit, there are actually there are different types of audit opinion. Um, External audit is required and they provide a report, an audit report, which is attached to the financial statements to be submitted to the SEC, to the BIR. Okay. So the report that they issue, there are actually a few types of opinions, but the most common types of opinion would be the unqualified and the qualified opinion. Okay. So at this part, um, let me check how long we've been recording. Okay, 5 minutes more. Qualified and then unqualified. There might be some confusion, because of the usage of the term. But in accounting or in auditing, unqualified is the best type of audit opinion. Essentially, it means we did not see any errors, or if there are errors, it's only minor and they have been corrected. And then the records are essentially prepared in accordance with the standards. It represents in all material respects the records the statement of financial position, financial performance of the church. Okay. An unqualified opinion is issued when, no problems, no major problems were seen in the financial records. Okay. You can say it's, clean. The records are clean, there are no problems, so unqualified opinion. Okay. The other one is qualified opinion. Okay. Qualified opinion means there are certain areas or certain items in the financial statements that are a bit questionable, and the auditor, upon checking with the management, they are unable to gain further information to justify or to explain those questionable transactions. Okay, it's possible that the management may not be cooperative, or the management also doesn't know what happened to those particular transactions, or they are simply mum about it. They don't want to talk about certain transactions, or they're keeping certain information from the auditor. Okay, in that case, the auditor will be issuing qualified opinion. Qualified in such that there's a general statement that after auditing the financial reports of this company, we did not, all records are presented fairly in all material respects, blah, blah, blah. Okay, later I think I will show you an example of that particular statement. But after that, what do you call it? After that general statement, there's a follow-up statement stating, making exceptions. Okay, a general statement, we did not see major errors or anything fraudulent except for the following items. Okay, the exceptions could be in specific items, let's say property, plant, and equipment. There's a record of a building amounting to 5 million, but we're not seeing any building. Okay. We are on location. We did a look around. We did a tour of the place, but we're not seeing a building. So why is there a 5 million in the building account? Okay. So, and the church is unable to explain such a thing. Okay. So that would fall under the exceptions. Or maybe, let's say, um, there are expenses, and then there's a particular expense account that is too high, or the amount is too high to be believable, or it's unrealistic, and the management refuses to explain. So they would also include a statement that we're unable to gather enough information with regards to this particular account, so we're unable to issue an opinion for this particular account. Okay, so there is that. Um, so those are just examples for the exceptions. Okay. The audit, external audit, is an it's a cooperative, what do you call it? It's a cooperative activity between the auditor and the management. So if the management refuses to provide all the information needed by the auditor, normally it, automatically makes them think, the auditor, it makes them think that the management is hiding something. Okay, so in that case, they might really be prompted to issue qualified opinion. Okay. Um, okay, I'm going to pause the video again, and then in the next video, I'm going to discuss the audit process, how the audit is done by the auditor. Okay, so that, later on, if you would be providing the financial records to an auditor, you would know how to, explain if they have any questions. All right, so I'm gonna end this here.